Welcome back. You just heard the closing bells there. Lots of cheers as we close out the day. Let's see where we finished. In the green across all four major indices. We've got the S&P 500 up 0.25% at 6481.39. The Nasdaq up 0.2% at 23,565.85. The Dow closing up 0.3% at 45,565.05. And the Russell 2000, our gainer on the day, up 0.6% at 2373.80. Now, I do want to bring in our closers panel ahead of earnings. We have coming out from CrowdStrike and Snowflake. We have Kevin Green joining us again, our senior markets correspondent, and Scott Durfey, our senior manager of trading services at Charles Schwab. So, Scott, coming to you first, as far as Snowflake, what are your expectations here, and what specifically are you looking for when the numbers come out?
That's a great question. This is one of the most closely watched names. It's really interesting because I've heard all day long, NVIDIA this and NVIDIA that, and we have some undercards. These are some pretty awesome undercards, if you ask me. This is one of the most closely watched names in cloud or AI infrastructure. The street's looking for a 26 cents a share. That's nearly 50-cent growth year over year on revenue of roughly almost 1.1 billion, again, about a 25% increase. So the real story here isn't just in top line growth, Marley. It's whether or not Snowflake can become the data backbone of the AI revolution. And that's what they're going for. Customers are expanding usage at a strong pace with net revenue retention of about 124%. Over 600 clients now spending over $1 million annually. A lot to look for in Snowflake. So we'll see if they disappoint or if they meet expectations.
And even we've seen this earnings season, Scott, even those meeting expectations sometimes see a disappointing reaction. So it will be interesting to see. Kevin, coming over to you, as far as Snowflake, what numbers specifically are you waiting to see? And what are you expecting on the call afterward?
I think the big key is going to be the backlog, obviously the new customers that they're bringing in, but also just looking at the pipeline of revenue over the next 12 to 18 months. I think that's going to be key. The technical setup, I think, is actually also very interesting. We did see a little bit of a breakdown over the last couple of weeks or so when it came to this bullish trend. Maybe it's consolidating a little bit. And when I'm looking at the technicals and looking at the MACD, we do see potentially a bullish cross here. So maybe this earnings announcement is going to be enough to be able to confirm that indicator, and then maybe buyers really do try to step in. So very high bar, I think, kind of going into this because of MongoDB yesterday. We'll see if they're able to kind of reflect the same type of trend that the cloud players are really taking in market share and also expanding margins. The big risk is going to be a contraction of margins or a deceleration of margin growth here, and that could be the direct result of building out AI infrastructure and that cost hitting the business.
As far as, as we move to CrowdStrike, as far as, Scott, for you, what you're keeping an eye on here, all eyes on revenue growth. They didn't have a particularly strong fiscal first quarter. But how important is their guidance? Because I've seen multiple notes about that there's some worry surrounding their guidance and their cash generation decreasing.
Yeah, a great question. As we know, guidance is supreme to all other things when it comes to earnings calls. We see this earnings call in, earnings call out. We have great earnings and guidance comes in not so great, and it really affects the price action of the stock. Guidance is going to be supreme above all things. And CrowdStrike is especially important in light of the security breach with Falcon and the other problems that they've had in the past. So investors and traders are going to want to get some comfort around, is CrowdStrike really poised to do what they indeed say that they're poised to do? Most traders and investors, I think, are leaning and moving in that direction, but they're saying the wrong thing in guidance today could really affect this the price action of the stock today.
And Kevin, coming over to you, the stock's up about 24% year to date. It is performing well on the whole. Some flags here, but long-term potential seems strong. Analysts seem to favor CrowdStrike. I'm just refreshing to make sure they haven't come out yet, the numbers. But for you, what's the biggest potential catalyst here to the upside or downside?
It's going to be the guidance moving forward. If you look at the last earnings announcement, that's really the issue that you had. Obviously, Scott talked about some of the fundamental problems that they're having. But if you're looking at the mid-tier or mid-size or smaller companies that do interact with the business, they have seen a little bit of a slowing. So you want to see them be able to backfill that, bring on new customers, and really try to meet and exceed their guidance when it comes to some of the commentary moving forward. I think that's going to be a key sign for them. So it does appear Snowflake probably is out right now, though. It does appear that the stock's moving higher.
All right, Snowflake is just coming out right now, so we'll switch over to them. We're taking a look here at second quarter EPS of 35 cents. That's besting estimates for 27 cents there. They're seeing their fiscal year product revenue coming in at $4.4 billion. Estimates were calling for $4.34. Second quarter product revenue coming in at $1.09 billion. That's a beat for estimates for $1.04 billion. Revenue overall coming in at $1.14 billion. Estimates were calling for $1.09. So a top and bottom line beat here. You know, Scott, the numbers still coming out here, but thoughts on this? Is this going to be enough?
Again, you know, it's close. They're in there, but again, guidance is going to be supreme. We're going to have to wait. Unfortunately, I would love if we could just get all the information we needed to get from what's flashed before us right now. Unfortunately, it's not enough. We're going to have to see what guidance has to say. I think that with these numbers, this could be impetus for some positive movement, but we'll wait and see.
And Kevin, you know, coming over to you, they're seeing their third quarter adjusted operating margin into 9%. Shares are up about 10%. They did raise their yearly product sales view. Their product revenue forecast is up, beating estimates as well here. We just talked about the guidance is the story here.
Yeah, I mean, from the numbers that you just kind of talked about, it seems like they have met and exceeded the Street's expectations. I think you're looking at also the remaining performance obligations for the quarter sitting at $6.9 billion. That's around 33% growth year over year. That's exactly where you want to be if you're this company. And then also looking at that revenue or that net revenue retention rate sitting at 125%, which just means that they continue to grow. So the remaining performance obligations is kind of that forward guidance, if you will, when it comes to realized revenue over the next 12 to 18 months. If you can do that at a 33% clip, and let's just say that 85, 90% of that actually does come to fruition, you're looking at pretty decent year-over-year comps if they're able to maintain that. And it does appear that they are seeing obviously a little bit of a hole here when it comes to artificial intelligence and scaling their business. And then last but not least, the margin aspect, where we talked about the fact that they are spending a little bit more when it comes to AI infrastructure. It looks like they also have that pricing power and the amount of volume from a customer standpoint to really offset some of that risk, which is also a positive. And that was one of the bigger factors that analysts had going into this report, was that margin side of their business being potentially at risk.
Yeah, you know, as we're looking at the numbers, you know, Scott, I'm not sure what's coming through on your end yet. You know, we're up revenue 32% year over year. Product revenue also up 32% year over year. And then those margin numbers for their guidance going forward for third quarter, their margin is 9%. They're seeing product revenue at $1.13 billion for the year, seeing margins at 9% instead of 8%, also seeing product revenue at 4.4. So, I mean, their guidance story is strong here, and the Street's responding well. But, you know, what's the call? What's going to happen on the call? You know, what are the investors and analysts going to be looking for from management?
Yeah, and that's a great question. One, obviously, that, I don't have a definitive answer for. But I think it's becoming more and more obvious here that these guys are really beginning to be more, again, of kind of the data backbone for AI. And we'll see potentially, and I think Kevin talked about this in an earlier segment, but we could see potentially, if Snowflake indeed does move the way we anticipate it, that it could potentially move on this, and that a way that is potentially showing, we could even see sympathetic moves in companies like Datadog, for example, or MongoDB. I know that Mongo reported earlier and has had some movement, but we could see some movement from other companies like those in conjunction, because Snowflake really has kind of become that backbone, and I think that they're underscoring that with the numbers that are coming out today.
You know, and it's interesting too, you know, Kevin was mentioning, you know, how important their current remaining performance obligations were, coming in 33% year over year higher at $6.9 billion. You know, net revenue retention rate we haven't even talked about here at 125 to 127%, better than the 124 expected. You know, all in all, these are really strong numbers for them. The question is going to be what the commentary is on the call here.
Yeah, again, no question. Commentary, again, rules all. Kevin probably has some thoughts on that as well, so I'll turn it to him. But agreed, 100% agreed. Commentary and guidance is going to be supreme here once again.
And we're just getting CrowdStrike out here. They are coming in with EPS of 93 cents. That's beating expectations by 10 cents. They were looking for 83. They came in at 93. Second quarter revenue coming in at 1.17 billion, beating estimates just a hair. 1.15 was the expectation there. For the third quarter, EPS expecting between 93 and 95 cents. Estimates were calling for 91 cents. Revenue expected to come in under. Expectations were calling for 1.23 billion for this current quarter that we're in. They're forecasting between 1.
Yeah, you got that right. I find it interesting, the timing on the announcement right before. And the thing is that to me, it doesn't make a ton of sense that we would do it that way, because if we're trying to do that to run interference on other data points, well, we don't have enough data points on the information coming in, so it just creates more confusion. So, I think guidance is going to be extremely important. Here we go again, broken record, right? But here we go again. Guidance is going to be extremely important with CrowdStrike. CrowdStrike's got an uphill climb. There's no question. That's big. That's a big okay in most cases, because they have a big target. They're a big company that's doing great things. So, guidance is going to be important. Investors and traders, they're hoping and wishing for CrowdStrike to do well. So any kind of good news, I think, will work in CrowdStrike's favor. Any bad news is definitely going to hurt them, though.
And Kevin, as you're having, a couple more minutes to take a look at the rest of these numbers as they're coming in, what's sticking out to you?
I'm looking at the numbers just like you. It might be the acquisition. Look, it's not outside of the norm for an announcement like this if they don't know how they're financing the final deal, right? So it could be cash deal, it could be cash equity. I mean, and that uncertainty can pressure the stock. So maybe if we have more once they follow up and provide concrete details as to how they're going to really finance the deal, I think that probably will ease the street a little bit more. And then also, if you're growing and you're trying to grow and you're just doing that inorganically, does that say about your in-house processes and trying to be able to, bring products to market and fast track it? It seems like they're maybe having an issue with that. And once again, the uncertainty probably is pushing down the shares as well.
Well, CrowdStrike shares down about 8% on their earnings. Top and bottom line beat there, but a miss on their guidance. Snowflake having the opposite response, up about 3%, also have beats there, but with really strong guidance and product revenue estimates increased. Thank you so much, Scott Durfee and Kevin Green, for being with us to break down CrowdStrike and Snowflake.